Good evening, everyone. Thank you for joining us tonight. My name is Todd Lotchbike. I'm the Director of Employer and Alumni Relations within the Career Center at Yeshiva University. Welcome to What is Wall Street Other Than Investment Banking? Just a very quick backstory on this event. This is probably the 8th or 9th year that we're running this. Obviously the first time virtual, but the goal is really to talk about what are the areas of finance within the finance industry besides just investment banking. And we've assembled a wonderful keynote who I'm going to get to in just one second, as well as a excellent executive level panel that we'll be closing out the evening. But we have a very full program tonight, so I don't want to take up too much time here. One thing I will mention is if you do not have your camera turned on, please do turn it on. We're hoping for this to be a very interactive event, and cameras on does serve to facilitate that. So please do turn your camera on if you don't already. And without further ado, I would like to turn it over to our keynote. It's Jillian Mariutti, who is a very good friend of Yeshiva University. She's currently a director on JLL's Debt and Equity Financing team in New York. She has very impressive credentials, very long history in the industry at this point. So without further ado, Jillian.
Great. Thank you all very much for having me today. I'm seeing your face, Todd. Am I in the right speaker?
You are. Yep.
Okay, great. Good stuff. Well, thank you all for having me. What I'd like to do is just take this time to share a little bit about my journey, my career path, and then a little bit about those different roles that I end up taking in finance. As the title of the seminar is, it's basically, not just all investment banking that you can do in finance. So I'll share a little bit in greater detail on my career path. And then at the end, kind of just highlight some takeaway themes that I think will be helpful. Now, is the audience all seniors or some mix of juniors and seniors?
It should be a mix, like some first time on campus, like sophomores and juniors and some seniors and things like that.
Great. So the beginning part of my story will be extremely relevant because I'll start with, part of the interview process. So by way of background, I was born and raised in Philadelphia. I did not go too far for school. I went to the University of Penn. I ended up majoring in math only because I really liked numbers. I always just had a knack for it. I come from a pretty humble background. So these worlds of commercial real estate and Wall Street was just foreign to me. So I ended up majoring in math. And fortunately, I was able to drop my resume to a lot of different opportunities that's my senior year. And through my senior year, I was able to get these interviews and sit down and learn just as much about them as they were learning about me. So what did I know about myself by that point? I knew that I liked numbers and I knew that I liked people. And I didn't want to be stuck in a job crunching numbers in a cubicle. I wanted to make sure I'd be able to interact with people as well. So here I am, a senior at Penn, going on all these various interviews. And like I said, I was learning just as much about them as they were learning about me. And that helped me because I knew I didn't want to be an actuary because yes, actuary checked the quantitative box for me, but it wasn't enough people interaction. So through that process, I was able to get an offer from Wachovia. This was in 2007, back when there was a Wachovia, to join their interest rate derivatives desk. I didn't know what a derivative was. I didn't know really anything in finance because I just studied math. So it was like learning a new language. But what they saw in the interview process was someone who was trainable, someone that had the skill set that would be good in this seat. So I like to mention that because a lot of people get a little nervous that they need to know everything about finance in order to get a job. And that's not the case. You just need to be really clear on your strengths and play up to those strengths. And the people who are interviewing you are going to know, who's a good fit or not. So now here I am getting this job interview, the job offer from Wachovia. I graduate in 2007. So I start my career on the interest rate derivatives desk, June 2007. Very interesting time to start one's career in finance because then it's the crisis. So Wachovia then soon becomes Wells Fargo, and we have all these changes occurring. By the end of 2007 and 2008, you had Bear Stearns go down and Lehman Brothers shortly thereafter. So there's a lot of shakeup, but that's the best time to learn is when you have those moments of volatility. So I was able to weather the storm, and I stayed on this derivatives desk. Now I'm going to take a moment and explain, okay, what did I do? So as an interest rate derivative person, I'll start off by talking a little bit about what I do now in commercial real estate, because it'll layer into the derivatives. So if you are a commercial real estate owner or developer, you own or develop ground up construction, multifamily, hotel, office, all various commercial real estate assets throughout the country. That's what I covered when I was at Wachovia, Wells Fargo. I covered the commercial real estate sector. So I worked closely with owners and developers. And when would they need money at the bank? They needed money when they decided to acquire a building, when they decided they needed to renovate a certain building, or they decided they wanted to do ground up construction, or when they needed to refinance. So these are all examples of when owners and developers need money. So they decide, okay, I need, some money from Wells Fargo. So they give it to them. Wells Fargo maybe gives them a floating rate loan. When I say floating rate loan, that means it's an interest rate that's floating. So they may give them $100 million to make the renovation or acquisition they need to do. But the interest rate that the client needs to pay back to the bank is at LIBOR plus some sort of spread. LIBOR, and for any of you who are unfamiliar, it's an index that's variable and it can change and get reset and it can move. So if it's a 3-year loan, there's a chance that LIBOR can change over those 3 years. So what a client would want to do is, all right, great, I'm getting $100 million from Wells Fargo in order for me to buy this building. And I have to pay that $100 million back, by the end. But along the way, I have to make interest payments. I want those interest payments to be known and fixed. I don't want them to potentially skyrocket. So who do you call? The interest rate derivatives desk, interest rate risk management. So that's what we did. We helped these clients mitigate interest rate risk when they borrowed money from the bank. And this is just one example where it was a floating rate loan and they needed to think about ways they can mitigate that risk and hedge it. So I won't go into any more detail there, but just to give you an idea, that's not investment banking. That's part of the sales and trading desk. So it's another example of something you can do within a bank that's not IB, that so many of us, grow up and hear about and think about. So moving on from derivatives, here I am at this Wachovia Wells Fargo. I'm an analyst. I grew to an associate vice president. I was covering hospitality finance clients as well as multifamily. So basically that just meant owners and developers of hotels and big apartment buildings that, we see walking the streets. And I got really interested in what my clients were up to. I got more interested in what they were doing and wanted to better understand the valuation of the property. With my bonuses as an interest rate derivative specialist, I started buying up real estate in Philadelphia with my twin brother. So I naturally had this pull and interest to be a little bit closer to the asset. So I did interest rate derivatives for 10 years. And then I got a little bored. LIBOR stayed low for a really long time, if you recall, right? It was all throughout the period where we were coming out of that recession, the great financial crisis. And I felt like I was ready for that next chapter. So after 10 years of doing derivatives, I was ready to explore some other options. And that's when I started thinking about, okay, once again, what are my strengths? I like people, I like numbers. So I definitely want to be in a field where I'm applying both of those. And I know I have this attraction to real estate. So what can I do that'll be a little bit closer to the asset? I started meeting and getting coffee with everybody and anyone, because when you start working in this industry, you start growing a network. And that is crucial to know and understand what's available out there, right? I'm a girl from South Philly who didn't know anything about Wall Street or commercial real estate. And I just took every meeting that was offered to me as a senior. I ended up where I should have. Here I am now itching for that next chapter, figuring I'm ready for, another move. I started setting up all meetings with various people in my network and talking to them and trying to learn what's available, what's out there. And it was through that process that I got put in touch with another individual and another person. And I'm just getting coffees. And, COVID will hopefully, dissipate soon, where coffees will be something to do. But you can always get on the phone and call people or do these Zoom meetings as well. So it was through that process that I started getting clear all right, I spent 10 years derivatives. I built up a great Rolodex of commercial real estate owners and developers. I want to be able to utilize that. But I don't want to be an interest rate risk management person. I really want to better understand the valuation of the real estate and the financing. So that's where I'm starting to get a little bit clearer. All right, so I think I need to be in a role where I can do that. And that's when someone said to me, you should join a firm like an HFF, JLL, Cushman, where you're able to leverage those relationships you've made, and then you'll get to build and expand your technical skills by learning, the new product. So that's when I started going on those interviews, and I was able to make the move out of derivatives and in at Mission Capital. Mission Capital is a smaller boutique firm where it was a great place for me to cut my teeth and for me to learn now the technicals on this side of the house. So I didn't know how to build or underwrite anything. I knew derivatives. So I'm in this new seat as a producer where I'm tasked to go out and originate business, but I didn't have the pleasure of being a 22, 23, 24-year-old analyst in the weeds, knowing it inside and out. So that was challenging. So I had to make sure I was learning the technicals at the same time as leveraging relationships and originating business. And I did that for 2 years at Mission Capital, and it went well. And I garnered the attention from HFF, which is a bigger, larger firm. And then HFF and JLL merged. And now they together are a huge commercial real estate advisory firm. For all of you who may not be familiar with them, we're #1 in capital markets. We help commercial real estate owners and developers with their cap stack, right? What I kind of started this conversation explaining when people need money, when owners and developers need money. It's in times of acquisition, renovation, stuff. We did 100 billion of financing last year, to give you context on what type of deals and the quantity and volume that we do. So it's amazing. It's exciting to work on a platform where you get to see so many reps and then you learn so much about the asset, which is exactly what I wanted and what I was itching for just a couple of years ago. So to wrap things up, here I am as a director at JLL. And I am working with the same clients that I was working with before. But now I'm not just helping them with their interest rate risk management. They'll still ask me those questions. You can't ever unlearn it. But now I'm helping them a couple steps before that point where I help find them money. That's all it comes down to. I help find them and capitalize their cap stack with the amount of equity and debt. Now, there's a lot of different nuances within the debt. You can have a floating rate loan, fixed rate loan. You can get something from a bank. You can get it from a debt fund, a life company. So there's various capital sources, and you go to those various capital sources depending on the deal that you're working on, right? If it's value add or if it's permanent, stabilized. So, but we could go into granular detail at another time on that. But just high level, that's what I'm doing. I'm basically finding money for owners and developers throughout the country. So just to wrap up some takeaways, I didn't mention it, but when I made the pivot from derivatives to what I do today, my mentors that I got and I made over the years were instrumental in that decision for me. They guided me. They helped make those introductions. So I was getting coffee with the right people. And when I started to get offers and opportunities, they helped me decide, no, that's not where you need to be or where you want to go to grow. Yes, this is where you want to be, where you want to go. They were kind of like my board of trustees. It was like I kind of built a council, and they were instrumental in me making those big decisions. I already alluded to this. I come from a humble background, so I don't have family or anyone who's in the business that would be able to give me such guidance or advice. So if I didn't have the mentors that I had, I wouldn't be able to make the decisions and continue on the path that I've been on. So the takeaways from my journey, I think, are #1, really get clear on your strengths. Know what it is that you bring to the table that's strong. That's going to help you determine. For me, I knew I like numbers and people. You have to get clear on what it is that you like, and that will help you navigate what role you'll be able to excel at the most. Number two, talk to everyone, network, reach out to every single person, anyone who's willing to take a coffee meeting or a phone call with you. You want to capitalize on that and learn from them and listen and ask questions. And then they'll take a liking to you, and then they want to see you do well. And then they'll make another introduction. And before you know it, your network is growing. And then three, which I just touched on, mentors are crucial. How do you find a mentor? They come kind of naturally. I wouldn't force it. Sometimes you work at a company where they'll have scheduled, mentor-mentee programs, which is great. But you're going to meet people in your passing that you're going to bond with. They're going to take a liking to you. They're going to want to see you do well. We've all been 21, 22, so we're going to always want to pay it forward. So when you meet someone that you want to see do well, you're going to stick your neck out for them and give the time and attention to have calls and give guidance.
Awesome. Jillian, thank you so much for that journey and those excellent words of wisdom. I did have a couple of questions come through in the chat, so I'm going to go to those right now.
Sure.
So from S.J. Tenenbaum, who's a rising upper senior majoring in finance, marketing, and management and minoring in psych. While you said before that you don't need to know everything to get a job in finance, what would you say are the key skills and questions you should be able to demonstrate and answer in most finance job interviews?
That's a great question. And you know what I'm going to share also, Todd, with maybe you can share with the folks who are on the call today. I have a list of sample mock interview questions. I can't stress this enough. You need to practice and do mock interviews before you go in for the real interview so that you have a couple of those key questions already known, which is why you, why this industry, why this firm. You need to have those really clear, and they have to be a minute or so each, a really good sense. And then you really want to know your strengths, your weaknesses. That's how you're going to show well in a finance job interview. I didn't need to know what a derivative was because I didn't study it. But what they did do was make sure I was technical enough. They had a couple of quantitative questions or brain teasers, but what they were mostly looking at was to see if I got flustered. And in the middle of me thinking about it, they asked me another question. And if I panicked or freaked out, that wasn't going to be a great testament that I can withstand the fast pace of a trading floor. So if you don't ever know an answer to a question they ask you, you stay calm, you stay confident, you make them hear what you're thinking about. They like to see your train of thought. And then you can always say, I want to give that a little bit more thought. Can I come back to you, after the interview, after I put a little bit more time and attention to it? That is more important than the actual correct answer itself.
Yeah, absolutely. You're absolutely correct. And yes, I know when we spoke a few weeks ago, you mentioned that document, which once I have it, I'll absolutely send it out to all the attendees on the call. I will also take the opportunity to plug the Career Center because our career advisors are here for mock interviews whenever you like, if it's just general prep or if you have a specific interview or something like that. And we also have the online resource Big Interview, which is a virtual mock interview platform where, even in an non-COVID world, many organizations are now using virtual interview platforms where you're recording yourself. So it's an excellent resource for the students to use in preparation. One other question from a student. How common is it for people to switch finance jobs, and how exactly does one build the relationships to help them succeed in the business world?
Sure. I would think there's no way at 22 years old, you're going to know exactly what it is that you want to do for the next 30 years. So I think evolution within finance occurs frequently, and it's when you become knowledgeable on what opportunities exist. And sometimes that's getting your first job, getting exposed to it, maybe being at a bank or a debt fund or many other. There's so much you can do in finance. It's such a big landscape. It's until you have that first job do you actually really learn about all the opportunities you have access to. And then you might find a better fit to your strengths, which is what we spoke earlier about. And then maybe making a pivot after a few years is pretty likely. And you have to always want to challenge yourself. I started feeling complacent, around 30 years old or 31, whatever it was. And you shouldn't be complacent at 30, right? You have to feel like you're challenging yourself. And it was because I wasn't in a field or a position that excited me anymore. And that's when you have to make a move and make a change.
Thank you. I have time for one more question for Jillian, and this is a good one. First, thank you for your time. This is from Daniel Spergel. With interest rates being so low, commercial real estate vacancies rising, and the S&P 500 doing so well, how have all of these factors impacted raising capital?
Okay, it impacted it significantly. So this year has been very volatile. When there was a really lack of clarity back in April and May, you saw a lot of capital sources pencils down. They were like, we can't look at an underwrite deal because there's just too much in flux. Then we really saw capital come back to the table shortly after summer and it picked back up. And that's your banks, your debt funds, your life company money, because they started feeling like they can underwrite a deal. When you underwrite a deal and for you to lend money, you always lend money when you feel confident you're going to get paid back. So if you don't have a good understanding on what the revenue looks like, then you really can't put a good handle on the likelihood you get paid back. That's why they were pencils down for the beginning part of the pandemic. As we started making progress and getting more clarity, and now we have vaccines rolling out, we feel like we're seeing the light at the end of the tunnel and it's brighter. You're seeing a lot more players come to the table and feel like they can underwrite what that income is going to look like. Therefore, they're able to underwrite what type of loan they're able to issue, because it's all about being able to be paid back.
Excellent. Awesome. Jillian, thank you so much. This has been wonderful. Again, thank you for giving us the time tonight. I know you're very open to students reaching out to you. So if there are any further questions, I'd be happy to share your contact information if that's okay with you.
Please do. And don't hesitate to reach out if you want to continue the conversation and, can help with any sort of mock interview related questions, things that, any tips, happy to help.
Awesome. Thank you so much. A big round of virtual applause for Jillian, everyone. Thank you again.
Thank you for having me.
Yes, thank you. So now, before we get to our executive panel, I would like to introduce Collins Marshall from Jobscan. We alluded to this in the invites that we've been sending out, for this event, but Jobscan is an amazing new resource that the Career Center obtained and Yeshiva University obtained over the summer, I would say, so several months ago. And it's all about defeating the online application. I can't tell you how many times I hear from students, well, I'm going to send my resume in, but nobody's ever going to look at it. So how do you overcome that? And here to tell you about how that could potentially work is Collins. Collins?
Thank you so much for having me. And I can't express this enough. We're so excited to be partnering with Yeshiva University. As Todd pointed out, my name is Collins and I work for Jobscan. Oddly enough, got my start as an analyst at UBS, moved over to the sales side on Merrill Lynch, spent about 10 years in private wealth. So I feel what you're going through. You're getting ready to enter a really fun and exciting period of your career. But before you do, I want to set some expectations for the challenges that you face. So what I'll do is I will share my screen with you and walk through some information. So if this had been 15 years ago, the average job application received somewhere between 70 to 80 applications per role. And what that meant for a recruiter is that they could read through each and every one of them. Well, today that looks a lot different. And the average job receives about 250 applications per role. Now, what this means for the company is there's no way for a recruiter to read through each and every one of these applications. So what do? Like most places, they turn to software for it. And the software that they use is something called an applicant tracking system. 99% of Fortune 500 companies use them. Somewhere between 60 to 80% of small and mid-sized businesses use them. But an applicant tracking system's function is to take keywords and skills from a job description, kind of lay those out, and then compare those keywords and skills to a series of resumes, basically stack ranking those resumes against each other. Now, from here, what happens is about 70 to 90% of the applications get filtered out. So a majority of the time, people aren't actually taking a look at your resume. But what happens from there? Well, once those resumes are stack ranked against one another, and by the way, the key is not the most qualified person. Instead, the real key is who's using the right words skillfully. Well, then from there, the average job has about 6 to 7 seconds to look at each resume. This doesn't leave a recruiter with much time to actually take a look at it. So you need to make sure that you're using information that really pops out to the recruiter and connects to them. Well, then from here, only about 2% of people get interviews. At the end of the day, one person's dream is realized. When we recognized the challenge that was going on behind the scenes, we decided we were going to do something about it. And so we actually reversed the algorithm that applicant tracking systems use to determine match rate. And this is what you all have access to. So first thing, when you log into Jobscan, as you can see, you need to get anywhere. The scroll bar is the easiest way to do it. But for our purposes, what I'm going to do is I'm going to start by uploading my resume. And then I found this really cool job at Goldman Sachs that's got me interested in the company. So I will copy the job description. And I'm just going to copy it until the job description really cuts off. Save the human resources language for later. And then I'll click scan. And so again, what's happening behind the scenes when I click scan is we're reversing the algorithm that applicant tracking systems use to determine match rate. And as you can see, low match rate. Oh my gosh, I have two choices. I can throw my hands in the air and give up, or I can do something about it. I'm going to choose to do something about it. So the first thing I'm going to do is I'm going to take a look and identify which applicant tracking system is Goldman Sachs using. To do this, go down to ATS tip, put in Goldman Sachs, click save, and then I'm going to go to the career site. I'm going to copy it, and I'm going to paste it. Now, why am I doing this? Well, as we like to say, not all applicant tracking systems are created equal. And in this case, Goldman Sachs uses an applicant tracking system called iCIMS. Now, I'll only walk you through one bit of information about it. You can do this on your own. One of the keys is that iCIMS uses frequency of skill to determine search result rankings. So naturally, you want to be one of the first names that comes up in the applicant tracking system. It's the way to get ahead. So what do I need to do about this? And why does this matter? Why does frequency of skill matter? To understand that, what I'll do is I'll come down to skills and keywords. So you can see I'm missing 14 high value skills. I'll click missing skills below. And as you can see, around here, operations is mentioned once in my resume, only one time. It's mentioned in the job description 14 times. Now, going back to frequency of skill to determine match rate, what this means is I need to use this skill more often. And this is specifically with iCIMS. If this was Workday, another big ATS, I wouldn't need to worry about that. But if you have a question about something, let's just say you run across something, you don't quite understand what they mean by it, like client relationships. What exactly do they mean by this? To find the context from the job description, all you need to do is click on the word and it'll take you right there. So our client coverage group manages client relationships to enhance the client experience front to back. Okay, great. Now that you know this, what you can do is you can come in here and I'll include the first word, banking. And as you can see, all of a sudden the pinwheel is turning and the resume is up 1%. Come back down here. As you can see, I'm including this word and all of a sudden the pinwheel is turning and the resume is up 3%. Now the key with this is repetition, making sure that you get your resume to the point where it's easy to understand, making sure that it's accurately placed. All this information is there the way I want to. From here, you have a few choices. You can either, if you get to the resume to where you feel comfortable and confident about it, you can download over a .doc. That tends to be the easiest way for ATSs to read the system. Believe it or not, it's not PDF, something that goes completely against traditional feedback, or you can download as a PDF if you want to. But for our purposes, I'll click Save Scan, and I'll walk you through a few of the other features. So as you can see, when I come down and I'm going to go through a little bit more, it'll go through everything from which ATS tip is it? What sort of skills and keywords am I missing? It's an easy thing to include. Job title match. Believe it or not, they'll actually look occasionally for a specific job title. And then education. Now you went to a higher tier school, so people are going to know who Yeshiva is naturally. So when they look for top tier schools, you're going to be one of the ones that comes up. But make sure that you're applying and it's a relevant role. So in this case, the job requires a bachelor's degree. I have a master's in mind. Maybe I'm overqualified for this role, but maybe I'm a career switcher. So who knows? And then we'll look at things like section heading and file type, date formatting, We'll look at word count to make sure you're connecting with a human being, quantified measured results. As you can see, 19 mentions of quantified measured results, and job title match. And in this case, it is a junior role. I'm probably either overqualified or underqualified for it, depending on how you look at it. And then we'll look at tonality. And by the way, when you go through this platform, if you have any, if there are any ever, man, if I could speak, that would be great. If there's ever a red X that you run across, it's just an opportunity for improvement. And if you need to update the resume, just go to Power Edit and click Live. As you can see, it'll go through things like hard skills. How do you connect with the ATS? Soft skills. How do you connect with the recruiter? Soft skills are a great way to connect with people, and we're going to display them all out there for you. So essentially what we're trying to do is we're trying to take the guesswork out of the resume and give you the ability to really kind of make your own destiny. We've had a lot of luck with it so far. And as always, if you have any questions, if you want access to the tool, by all means, head to your career advisory team. They're fantastic. One of my favorite groups of people to work with. Well, from here, should we get some questions going?
Oh, thank you so much for that.
Sure.
Super high level, and you stuck to the time, and it was extremely informative. I did receive one question from the students that I'll answer, because it was, it may not be entirely clear, but it was asked, is this a service that's open to all YU students? The answer is yes, absolutely. As a matter of fact, for anybody attending tonight, tomorrow you're going to receive an email from Joshua Meredith, who's my counterpart on the career advising side. He's the director of career advising and technology within the Career Center, with your credentials for a Jobscan account. Entirely free resource to use. I mean, you've just seen how powerful it is. So I strongly encourage you take advantage of that resource. And as always, the career advisors can help you walk through that process and answer any other questions you have as you kind of actually use the tool yourself. One question from a student. Oh, is there room to have a standard resume, or do I need to custom make it for every job application? Collins, do you want to kind of weigh in on that, or I can answer that?
By all means, I'd be happy to, Todd. So it's a good question. What I'd say is start with like a broad template that you're going to use to create a resume. So start with what I would call like a benchmark. The benchmark is going to form over time. But as you can see from the Goldman Sachs job description, one of the most interesting things is it's going to ask you about very specific experience. But if you go to JP Morgan, or if you go to UBS, or if you go to BAML, or whoever you go to, they're all going to call for something a little bit different. So in this case, it was a super low match. We recommend that you try to get close to 60%, because at the undergraduate level, 60% tends to be where you're one of the first people mentioned in the applicant tracking system. But for our purposes, you know, it's really all about identifying the very consistent keywords and skills that show up within these job descriptions. The problem is there's no consistency to it. So JP Morgan might be calling for one thing, Goldman's could be calling for another. You know, Bank of America Merrill Lynch could be calling for something completely separate. Whatever it is, it's all about fine tuning the resume to the point where you get in front of other people. You've got a great education to back you already. You're going to have the skills to go in and interview really well for these organizations. It's all about taking the time to get the attention. So can't reiterate that enough. If you're going to be applying to a role online, it takes a little bit of time, takes a little bit of execution, but once you do it, the likelihood that you're going to get noticed goes up significantly. And that's exactly what we want for you. We want you to get noticed. We want you to have an outstanding job on your way out of school. And this is a great system to do that for you.
Perfect. Thank you, Collins. Any other questions? We have time for about one more, if there's any specifically for Collins or about the Jobscan platform in general. Okay. And one thing I will say, you know, to the students is, you know, obviously, you know, YU has an incredible alumni network, who you're going to hear from very shortly as part of this panel. And, you know, they really help, you know, with students and getting into their organizations and things like that. But regardless if you're referred somewhere, if you meet somebody and they refer you to HR, you're still going to have to apply online. You're still going to have to go through that ATS no matter what. So by optimizing your resume through a service like that, it just adds even more oomph but behind your application. So I very much encourage you to use it. Last question came in: is it only for finance jobs and internships? Absolutely not. Collins could back me up on that. It's absolutely for any field, any application whatsoever.
Completely. I mean, for me, when I got out of finance, I left to go over to Procter & Gamble, where I spent about a year. And the reason I got the attention was because I used the Jobscan platform. Otherwise, there's no telling where I would be today. I mean, I know that's a little bit morbid, but you get where I'm coming from. No, it's an incredible platform. It can help you cross many different industries, even in the not-for-profit sector, government sector, you name it. Whatever you want to do, it's here to help you optimize your resume in a way that's going to get you the attention. And that's our objective for you.
Awesome. Collins, thank you so much again. If there's any follow-up questions I get from the students that we can't answer, I'll be sure to forward them along to you, but we really appreciate you joining us tonight.
My pleasure.
Great. And amazingly, we are exactly on time. So now it's my pleasure to introduce the executive panel. Well, I'm not going to introduce the panel. I'll let them go through the introductions themselves. But I'm very happy to introduce Mayor Lewis, who is an alum. I'm sure many of you know him or have heard of him. He's currently head of Financial Institutions Investments Americas at Nomura Securities International. So without further ado, Mayor, I'll turn it over to you.
Great. Thank you so much, Todd. Great to see you all. So I'm Mayor Lewis, and I'm joined with a very robust panel this evening of Rafi Friedman, Isaac Hagler, Dr. Avi Rosenbaum, and Isaac Zimmerman, who I believe we were in YU together. Here's I thought how we would organize this discussion, particularly on Zoom. We've done this in the past in person. So what I wanted to start with is maybe just 3 topics that we'll jump into. The first is I'll give a brief introduction to the ecosystem, just the ecosystem of what is Wall Street, how is Wall Street organized, what are the different kind of areas within banks and within non-banks on Wall Street. Then I think the main purpose of this session is to learn about different types of jobs and different types of paths on Wall Street. So each of my fellow co-panelists and myself will give you a 2 to 3 background on how we got to what we do, what we actually do, and then a little perspective on the type of trajectory that we're on and where we could be headed, what our options look like going forward. And then, we really want the rest of this session to be driven by you. This is an informative session for you. This is an opportunity for you to ask questions. So we'll pause for questions to help direct the conversation, and depending who's best suited among the panelists, we'll respond. And if we don't get a lot of questions, we'll hit on the typical stuff of getting jobs, advice on accelerating your career, any Jewish type of issues, or whatever else is really on your mind. And we will end by 9 o'clock. So we will keep this on time. So just going back to the first topic, maybe just a couple of thoughts on the ecosystem of Wall Street. And I think this session, I think it is called what is Wall Street other than investment banking? And my own background is investment banking. So I'm happy to provide that perspective. But I also think it's important to have a broader perspective of what I call the ecosystem of Wall Street, which is what are the various roles? Because every year I interview somebody who wants to be an investment banker, and I'm like, why do you want to be an investment banker? And they say, because I want to pick stocks. I like picking stocks. Okay, that's not what we do. Why else do you want to be an investment banker? Well, I like following companies. Well, it's not really exactly what we do either. So it's important to understand the different areas of Wall Street. And I'm not going to do the full kind of spread of all the different functions: research, sales and trading, investment banking, operations, wealth management. But maybe I'll just put out a couple of tools or a couple of dividers in terms of ways to think about Wall Street and ways that you can apply that to yourself in terms of your own area of interest and your own ambition. And a couple of these ways to, let's say, split the world are buy side versus sell side. I'm sure you've heard that. Buy side is basically investors. And I think we have two investors with us this evening, Rafi Friedman representing private equity and Avi Rosenbaum representing venture capital, or he'll explain specifically what he does. But you will hear from investors who deploy people's money in investments that they think will grow in value and pay dividends. And there's also sell side. And sell side are the people that originate deals, originate transactions, and prepare them in a certain way for investors. I would say as an investment banker, I tend to be on the sell side. So I tend to be preparing companies or offerings for sale or for capital raise. And I think your keynote speaker sounded like she came from more of a sell side background. So buy side, sell side is one way to think about the world, one way to think about your interest, one way to think about your skill set. And I think the panelists tonight can talk in those terms. Another way to kind of split the world or slice the world on Wall Street is public versus private. Public are things that are all public information. Buying stocks, buying bonds, trading. A lot of hedge funds purely act based on public information. Sales and trading functions within banks are generally public side and all public information. Research analysts tend to be public side. So everything they're dealing with all day long is public information, and they're just trying to filter it, interpret it, and analyze it in certain ways. And then there's private side. Private side is non-public information. There's a lot of regulation around it because it's information that could potentially move stocks and move markets. Investment banking tends to deal a lot with private information. So there's secrecy, discretion, rules, a lot of things you can't talk about, but also a lot of confidential analysis that you do on behalf of companies to help them make decisions in certain ways. And you could think in those terms. And then maybe one last way to sort of slice the world or think about the world is institutional versus retail. And institutional is dealing with corporations. They're institutional clients, they're corporations, they're executives, they're CEOs, CFOs. There's hedge funds, there's investors, there's private equity funds. They're all institutions. And then there's retail. And retail is a vast market. We have Isaac Hagler from a wealth management unit that can talk a little bit about wealth management. And when you deal with individuals, it's a little more personal, it's a little more specific. There's kind of more individuals than institutions, and it creates a different type of market and a different type of experience. So whether you want to see the lens or split the world as buy side versus sell side, public versus private, or institutional versus retail, I think it's important as you go into an interview or think about what you want to do to start to dissect Wall Street into some of the major food groups or kingdom phyla that help organize how Wall Street is organized. So those were just a couple of thoughts on the ecosystem, more as a prompt or a prod for my fellow panelists to talk about their own jobs and try to help you understand how they fit into that ecosystem. So what I'd like to do now is I'll go last, we'll go through each of the panelists, and I'd like each of them to take 2 or 3 minutes to provide their own background, college, major, first job, how they got to where they are, what it is they do, though we'll dive into that more over the course of this evening, and what trajectory they're on, where they're possibly headed. And again, I would just remind everybody attending this is for your education. So we're doing this to educate you, to teach you things that we think are going to be valuable, are important. It's obviously not about us at all. So I'll kind of keep people on schedule so that we move through this efficiently. And of course, we encourage questions along the way, whether in the chats or just unmuting. We don't have to be too formal about this. So with that, let me turn it to who I believe is the youngest of our panelists, who I know personally, Rafi Friedman, to talk to you about his background and his trajectory. Hey, Rafi.
Hey, Mayor. Well, thanks for the introduction. It's good to see you. It's been some time.
Yeah.
So I'll just kick it off with a quick overview about myself. So I graduated YU in December 2015, so give or take 5 years to the day. Career trajectory, I actually started as a bio major when I joined YU. Took a couple of chem and bio classes, disdained every last second of it. Thought about law, was a pre-law major for a bit of time. Started studying for the LSATs, didn't quite enjoy that, and I decided upon mathematical economics, so the new math econ major that YU has. And how I kind of found finance was more, I didn't know much about it as a freshman, knew very little about it as a sophomore, and there were a couple of juniors that were forming the investment banking society at the time. So when that happened, I started talking to them and just kicking around the ball. What is it? What do you do in finance? What are the different opportunities around? And when I did that, I made it my own personal goal to learn more. And I started reaching out to people, whether it be individuals like Mayor Lewis or other people from the YU community. And that's kind of what led me towards investment banking. So after graduating, I spent 3 years in investment banking. And I think it was a great experience. And I'm probably not the ideal person to talk to all of the different opportunities out in Wall Street, considering I started with a banking background. But it gave me a really holistic viewpoint to see what opportunities exist on the sell side and the buy side, as Mayor mentioned. And when I joined, in my head, I wanted to analyze stocks and I wanted to work for a hedge fund. And I think experience gives you a good mindset and some clarity. And I realized I don't want to have to deal with the public markets on a day-to-day basis and have my job and my career be based upon these external factors, like what's going on in the overall behavioral economics aspect of the economy and the stock market. So that's kind of what led me towards private equity, where we essentially look at partnering with different companies and management teams, usually through equity, but sometimes through debt, where we'll come in and we'll say, we'll give you X amount of dollars and we'll take either minority stake or majority stake in the company. And the idea is that we'll work together as a cohesive unit to kind of grow and then eventually sell the company down the road. So that's what I do in private equity. And before I pass it off, I just want to make one other comment. I think a great way to look at finance is buy side versus sell side. And I think that's a really good viewpoint. But even within both of those roles, there are different functions that people classify as front office, middle office, and back office. And I'd love to hit on it a bit later, but I think when you're in university, you hear, I want to be a banker, I want to be a trader, I want to work in sales, and everybody has their mind on this is it, this is all that's out there. And I think YU does a good job in trying to educate individuals on what opportunities are out there, but I think this is the forum to really talk about those opportunities and their roles within risk, their roles within credit analytics that are super interesting that I don't think people learn about enough. So just Mayor, maybe we can touch on this later on tonight, just the idea of front versus middle versus back office.
Great ad, Rafi. So let's incorporate that into as we discuss things, because I think you're right. That's a great other way to think about various positions. So with that, let me turn to Isaac Hagler, who's a VP at Deutsche Bank, I believe in wealth management.
For the overview, I think that was very good. I think when I was in YU, I don't think I actually got that type of overview. So things have gotten a lot better since then. In a sense, I think career guidance office is doing a pretty good job. When I was at YU, I wasn't sure what I wanted to do. And I fumbled around a little bit. I was going with the flow. And I decided, you know what, I enjoy as a hobby to look at firms, look at companies, do some research, mutual funds, and I happen to have done a good job. So I figured, you know, let me go to that approach. And I actually spoke with some people in Shul, and there was a person in Shul who I recognized, who I knew a little bit, and he actually had a family office. And during that time, it was a great opportunity. I stepped in and I did some research on companies, a lot of IPOs and the like, and we did a very good job. It was pretty good. At the same time, I was also running the operations as well. And over a couple of years, did well, but the stress got to me. And I decided, you know what, let me now go directly into operations. And so from there, I joined a place called Bankers Trust. For those who are older, probably know what that is. That firm merged with Deutsche Bank, and there I spent a number of years in operations. Mayor and Rafi talked about front office, middle office, back office. So I started out in the back office and moved to the middle office and supported a lot of the asset management world at that point in time, which is, of course, the buy side. And I enjoyed operations at the time. Going into a very difficult economy, I decided to stick with my manager, who was my manager at Deutsche Bank for a while. And he started at Morgan Stanley, where he was an auditor. And he said, Isaac, do you want to join Morgan Stanley? We're looking to grow the group in internal audit, and you have a great background. They want people who know the business. And I knew the business. So I jumped from there, from the operations side to the internal audit side, which is more of risks and controls. Over that period of time, I really understood risk controls. It allowed me to look at various groups within the asset management world and take it apart and understand it, which was great. From there, I moved to JP Morgan, where I took both a quasi-operational role as well as an operational risk role in a number of areas, mostly on the alternative side of things. So private equity, for example, would be considered on the alternative side of things as well. And I enjoyed it a lot there. But when an opportunity came back to join Deutsche Bank again, I took that opportunity where I've been working there for about a year or so in operations. So being a VP in operations, it's a major responsibility. I support the international private banking business there, where obviously as part of the wealth management business, which Mayor spoke about a little bit. And we support a number of products for our clients, include brokerage, discretionary, banking, and trust, among a number of them. And obviously as an international, we're all over Europe, Asia, ourselves, we're obviously in Americas as well. And what we do within operations, it goes from A to Z. We could take onboarding of clients. We can pay client bills. Maya talked about the retail side of things. When you're dealing with wealthy clients, they want the touch. And that's why they call it a private banking area. They want that soft touch. And as such, we provide everything for them. So that includes paying bills, includes taking care of their investments, trading their investments, making sure they receive statements that are timely and accurate as well. Maya discussed as well, or Rafi discussed a little bit about the back office, front office. Well, we deal with the front office a lot as part of our responsibilities, but we also deal with compliance, legal risk, and audit. The audit team, again, being part of operations, you touch a lot of pieces, and therefore audit comes after us. And I also deal with a lot of our operations, which are offshore as well. Nowadays, you see a lot of the movement of operations to a lot of different areas, including offshore as well. Part of my responsibilities also includes dealing with our vendors. We have outsourced providers who we deal with custody, etc. And there's a lot of responsibility there to be able to manage them, to manage our product as well. I'm going to stop there, and perhaps we'll answer some more questions later on.
That was great, Isaac. I would just emphasize a couple points. If you ask Jamie Dimon, CEO of JP Morgan, how he describes his role, he'll often say he's the chief risk manager. And at DB, the head of risk is literally the CEO of the company now, Christian Seving. So it's in terms of trajectory, I think more and more these days you see people with Isaac's type of background take on really the senior leadership, if not the top roles at some of these big institutions.
That's very true. Nowadays, when you're in operations, it isn't just operations, it's that risk. And when I was hired, they actually wanted someone who understood the risk controls background, because everything is about risk control. So whatever you do, it's risk control. So whatever you're doing, make sure you understand that aspect to it, because it'll help you grow in the company. Excellent.
And now turning to Dr. Avi Rosenbaum, who perhaps has the most interesting background out of all of us. Would love to get your perspective.
Sure. Good evening. Thank you, Mayor, for having the panel. Thank you to everybody in the career office. Also good to see Dean Strauss in the audience tonight. When I was in YU, I did not think about finance at all. I was perhaps the only person doing a bio major that was neither pre-med nor pre-dental, interested in more science and learning as much about science as I could. That led me naturally towards doing a PhD, and that's a big chunk of my 20s and 30s, and going almost to the age of 30, was finishing that PhD up in Boston. From there, I had a very strong interest in private startup formation and investing in startups. So finishing that PhD, there was about 4 different companies formed from the lab that I was at. I had offers from Foundation Medicine, if people are familiar with that company, went public for a couple of $2 billion 2 years ago. I passed it on to join a startup that's in the Photoshop behind me, Eintorn Systems. There, while working on the bench side, it was a really fascinating perspective as to how analysts are viewed within companies. I distinctly remember the founder of the company walking through with an analyst's prediction shortly after we were acquired by publicly traded Life Technologies, saying this analyst predicts this amount of sales for our first product because we don't have this full package yet. Everybody in the office, I'm giving you get the full package out so we can prove this analyst wrong. And so it was interesting to see how the companies are forced to react to Wall Street and how they change their own timelines to react to it. I spent 7 years there, launched about a dozen products, and got to see that intimately from the inside. And that generated enough experience to join as the biotech expert for venture capital firms. I'm embedded within Tectonic Capital, but I'm actually working with three different venture capital firms, as well as a hedge fund, as well as a PE firm. So the breadth of experience that I had at the startup was actually part of Thermo Fisher Scientific, and then 2 years of private company investment where I go to all of the incubators where these companies are being formed. We have lots of inbound information, and then part of a number of private Slack channels where like-minded investors share a deal flow. However, when I first looked at joining venture capital, I was told you would never find on any database a position being advertised as being open on venture capital. The concept then was the only way to be successful in venture capital is to network. And therefore, they don't want to recruit people into these positions. They want the person who's good at networking to find the open positions on their own. I don't think that's still valid nowadays. I do see positions being advertised, but a lot of it is still based upon that network, that understanding between peers. And coming in with my level of expertise gives me access to an additional level of opportunities. With this background and this breadth, I've also been fortunate enough to be exposed to hedge funds, $2 billion hedge fund, where I help them analyze, and they are teaching me a lot more about the finance than I ever thought I would learn. But now I'm working with them to understand IPOs, to help them understand the CVRs, to help them understand any bond converts. And that's been an eye-opening situation for me, learning the depth of the finance and how they approach these issues. And I'm giving back to them, providing value through my understanding of the science. The final company that I'm working with is a private equity, a company that is bundling together a number of other companies, in my mind, sort of a private equity deal, but scouring the world of opportunities to figure out where the best synergies lie for immediate bundling opportunity of 5 or 6 different companies that will be worth much more than the sum of their parts. So how does this apply to somebody as an undergrad? I was fascinated to see about 3 months ago, approached by somebody who was also a YU grad, who went straight from YU to a family office, and now, after 3 years, has had a very successful track record. But he realized that to get that further edge, he actually wants to go back to school and wants to get a PhD. Which PhD would I recommend to him so that he can really gain that stamp of approval to take that one step further? So he's 3 years or 4 years in finance, and now looking for the PhD for the right opportunity to continue his growth. On the other hand, I see plenty of people where they have an equal knowledge to mine without those 3 letters after the name. There's no requirement to have that PhD. One can be fully entrenched in the biotech world and live it through experience. And with the right resume and holding those conversations, you can amply explain to everybody and convince them that you know as much as Avi Rosenbaum does. and your opinion is as valid. So for work that I do, a PhD is definitely easier for opening up the doors. It's definitely easier to connect to the biotech founder or the biotech CEO on the other side because we speak a common language, but it's by no means a requirement for the type of work that I'm doing.
Excellent. Thank you. Thank you for joining us. Look forward to hearing more. And now finally, the last of our panelists, Isaac Zimmerman, who I believe we graduated together from YU.
Yeah. Mayor, thank you so much. And really thank you to everybody on the career office for hosting this and everybody joining. So I'll just give you a very, very quick background about me. So I graduated Yeshiva College in '98. So I graduated, I was actually a poli-sci major, although I did take some business classes. I ended up completing a business minor at Sci-Sims as well. I guess when I first entered college, I didn't have a well-formulated plan. I thought maybe I was going to go to law school, and I worked towards that. But I guess as I went through school, it was difficult for me to justify really to myself why I wanted to spend that time and ultimately money to go to law school. I wasn't justifying it to myself. And so while I was in school, I knew I had an interest in finance as well. And that's when I began to seek out internship opportunities, reach out to mentors, talk to people about what different kinds of jobs out there. And, I guess over the course of my college career, whereas initially I had law school number one and maybe get a job as my backup plan, over the time while I was in school, that shifted, where getting a job in finance became my primary plan and law school was more of like a backup plan because I had taken the LSATs and I figured, okay, that lasts for a few years. So, I always know I have that in my back pocket if I work for a few years and I just don't end up enjoying it or something like that. When I did start working, I did actually start working, oddly enough, more in an IT or IT project management type role. I worked at JP Morgan for several years. But then while I was there, I realized that I enjoyed really getting deeper into finance and specifically on a corporate finance side. And that's when I decided to actually pursue, an MBA degree while I was working, so that this way I could get deeper into finance, have a better understanding of it, and then ultimately make a career pivot, like you heard Jillian talk about earlier. And so, upon completing my degree, that's when I did make that career pivot, and I worked more in corporate finance. And so today, I actually work for Jefferies, which is an investment bank, full service investment bank, although not nearly as large as maybe some of the big names you may have all heard of, like JP Morgan or Goldman, but still offers full service investment banking capabilities, really across all products. And I focus in corporate treasury. Corporate treasury. I'm glad Rafi brought it up before, that dichotomy between front office and back office. Treasury is definitely more of a back office role, meaning we're not a revenue producing role. We're responsible for the funding, capital, and liquidity of the firm. So we raise money for the firm, we manage liquidity risk, and then we also manage the capital of the firm. Those are very, very important things to a bank. Especially, they've become extremely important, especially in light of the crisis. Many people will tell you, why did firms like Lehman Brothers, for example, fail during the crisis? And they will tell you they just didn't have sufficient liquidity. They had all kinds of, for example, long-term assets, and they were funding it with short-term paper. And so, there was a large reason for why they failed. So coming out of the crisis, Treasury has become a very important function within really any bank that you have out there on the street. I will say that, and we can talk later about this as well, but I will say for anybody who's looking to enter these fields, it is important over time to begin to to find an area that you like, and then really develop a specialized expertise in whatever it is that you do enjoy and that you do like, because for example, for me, I'm seen now as someone who, he understands bank liquidity. And so, that may be somewhat of a niche area, but that means that anybody who's looking for somebody who has that really understanding and focus, that's going to be the person that I turn to. And, that's the kind of credibility that you want to establish for yourself by developing that level of expertise. I will just say, just in a few seconds, I really hope all the students, please do appreciate that, certainly when people like Mayor and I were going to YU, there really were not a lot of YU alum in banking in Wall Street. There really were not that many. And certainly, I mean, if there were, many of them were either doing accounting or coding on the IT side. There were very, very few, if any, investment bankers who were YU alum. Or even just, you really didn't even have that many observant people in general, regardless of where they went to school, who were doing banking, sales and trading, anything like that. Today, in 22 years, there are so many YU alum out there on the street in front office roles, banking, research, sales and trading, asset management. They're all over back office kind of roles, risk, treasury, corporate finance, FP&A. And it's really a wonderful thing for students. If there's any just one takeaway from this, utilizing the career office and utilizing the alumni network is just so important. It's a tremendous asset that you have. And I hope you really all realize and take advantage of that.
Excellent. That was great. So what I'll do is I'll give a very quick background on myself. And in the meantime, people can think if they have questions, or Todd, let us know if there are any questions to direct the conversation. And if not, we have a couple questions that we'll use for discussion. So in terms of my own background, I got my first job from the YU Career Center. Naomi Cap, I think I saw her name on the screen. Naomi Cap called me when I was a junior at YU and said, I was a math major. They got a call from a firm in Fort Lee, New Jersey. It was like an actuarial consulting firm that they needed a math major to tutor a blind actuary. So twice a week, I would walk across the George Washington Bridge and read math textbooks to this blind, he happened to be Iraqi actuary, and he would do kind of the math in his head and use it as a way to study for exams. The exams were only administered, I think, once or twice a year. So in between exams, they kind of put me to work in the office. They gave me a desk, they gave me jobs to do. I got to experience a little bit of a corporate environment, which I had never been exposed to. I ended up from there moving to kind of various jobs before landing in investment banking. And I was in the investment banking department at Citigroup for 10 years. As part of that time, I did get to do a year abroad in Tel Aviv, in the Tel Aviv investment banking office, working with Israeli companies. It was a fantastic experience. And then after about 10 years, there's like analyst, director, VP director. I did get a job offer from Morgan Stanley. The specific area that I focused on, like kind of my industry, was insurance companies, dealing with insurance companies. And I was recruited by Morgan Stanley, where I was promoted to a managing director within their investment bank. I was there for 7 years, working in the Morgan Stanley investment bank. And then I was recruited from there to Deutsche Bank to run their insurance group. They had like a insurance investment banking group. I only did that for about 2.5 years, and I was recently recruited by Nomura. Nomura is a large Japanese broker dealer, very similar to Jefferies, actually, kind of structurally. And at Nomura, I run the financial institutions investment banking group. So I basically provide M&A, capital raising, and corporate advisory services to companies in the financial services sector. That includes banks, insurance companies, asset managers, fintech, especially finance, and some other kind of related areas. So that's my own background. I think from here, what we want to do is see if there are any questions to direct the crowd. Otherwise, we'll jump into a couple of on our own. Okay, and Todd, it looks like we've got some questions.
Yep, we got a couple came through, and I sent them to you through the chat.
Okay, so people say investment banking opens the door to other jobs on Wall Street. Is that true? And what are some of the other ways to open the doors on Wall Street? So I think that's a great question. I would say investment banking itself, not to kind of belittle what I do, but investment banking, as you've heard from all of our panelists and as part of the kind of ecosystem, is actually a very small slice of Wall Street. At Nomura, we hire 50 people into the investment bank a year. We hire hundreds and thousands of people into the firm each year. Every other firm is similar. So I would say what is there is an angle of investment banking, but really getting like an analyst job on Wall Street is what I would consider the door opener. And that analyst job could be in sales and trading, operations, wealth management, research, or investment banking. And the reason why people put a lot of weight on those positions historically is because of the training that the large companies provide. Large companies invest in new talent, they offer training, and those are historically viewed as sort of cachet, with a lot of cachet. I'm not quite sure that's the case anymore, to be just quite honest about it. I think there's a lot more availability of information at the undergraduate level or at the graduate school level that makes the like I went through the Solomon Brothers training, like in the book Liar's Poker. Like I was in that training class. There was something special about it, but I don't think it's so special that you can't like read it in a book today. So let me just pause on there and see if anybody else, if one or two others want to. I think I'm the one that has that background, but maybe Rafi, I think you also have that background. If you want to comment on the experience of being an analyst or going through that type of training program.
Yeah, happy to. Just to kick it off, I think Mayor did a good job of elaborating on the idea that there are other facets of the world of finance other than investment banking. I think the purpose of this discussion here is to understand some of those other roles. So when you think about it, and if anyone's watched the new HBO series called Industry, which is about sales and trading and investment banking, they'll know that investment banking is viewed as the ivory tower of finance. And to a certain extent, yes, I think it does open up doors more so than other roles in finance do. I think if you go into investment banking, you can go into almost any type of buy side role afterwards. While if you go into sales and trading, that's not necessarily the truth, just because of some of the training you get. But with that being said, I don't think that's a reason to do it on its own. I think it's a great training grounds and a great place to start if you're smart, you're motivated, you want to be challenged, you want to be in an industry that values what you do monetarily, because that's one of the reasons a lot of people go into investment banking, if you're going to be blunt. But at the same time, if you decide that you're a math person or you're an analytics person, then risk is an awesome place to be. And as Mayor was saying, Jamie Dimon, he's the chief risk officer. The CEO of Deutsche Bank used to be the head of risk. So does it give you great optionality and opportunities down the road? Absolutely. But as Mayor was also saying, I think there's such a breadth of knowledge in existence today. I think if you go to a website called mergersandinquisitions.com, which was just new when I was growing, Mayor's laughing, but it was just becoming a thing back in the mid 2010s. And now you go to the website, you can learn about banking, sales and trading, wealth management, operations, risk, compliance, which are all great roles. And I think all of them give you great optionality and opportunity down the road. So I'll finish off, and I think maybe we can hit on the differences between front office, mid office, and back office afterwards. But reasons people get attracted to finance is finance can cover anything. You can work in finance, but you can work in finance at a television company. You can work at finance at a media company, at a clothing company, at a food company. I think people sometimes get distorted by this idea that if you work for Goldman Sachs, you work in finance. If you work for Goldman Sachs, you can work in a plethora of different roles that aren't necessarily considered finance. If you work in accounting at Goldman Sachs, you're an accountant. I mean, you work for a financial firm, but you're technically an accountant. If you work in product management, you may work for a financial firm, but you're still a product manager, which means you oversee different developments of different growth products. Maybe it's a credit card, maybe it's something else, but maybe you want to go maybe your goal is finance, maybe you like dealing with numbers and analyzing different trends, you can go work for Disney and you can be in their financial planning group. So I just want to bring this up because the idea of this discussion is to kind of broaden everyone's horizon on the different opportunities that are available. Going to work for a financial firm doesn't necessarily, in my mind, maybe other people disagree, means you work in finance. But at the same time, if you go work for a different type of company, a big corporation, you could work in finance. And just to finish it off, I think a lot of these companies, whether it be the Goldman Sachs, whether it be the accounting firms, whether it be Disney and Procter & Gamble, offer incredible training programs and analyst programs where you can learn a lot that then can lead to incredible exit opportunities. Just look at one of our panelists, Avi. He came from a non-financial background and he ended up working in the world of finance. I think these are different opportunities that everyone here should explore. If banking doesn't sound interesting to you and there are other things that are, maybe you love food, then you should look into those options of working maybe in a financial role at a food company. I'll leave it with that.
Right. Thank you, Rafi. Okay, let's move on to another question, which is, I'm sure the panelists will have a lot to say on this. How do you consider work-life balance in your career choice, especially since finance roles have very long hours? And I think there was another question about work-life balance as well. So I don't know, Isaac, either of the Isaacs, if you want to comment on work-life balance in your roles.
I'll start it. Work-life balance can be very challenging at times, especially if you're starting out and it's quite busy. At the end of the day, you're going to have stress. You're going to have challenges at home. You're going to have challenges at work. The question is can you handle both of them, balancing it? It's a balancing act. One of the things that I've done before the pandemic was learn on the bus. So I need to get my learning in. So I was able to learn 45 minutes each way, back and forth. So I got it in that way. I have to work out at night. At the same time, spend time with the family. It's a very big challenge, but again, ultimately, it's something worthwhile. And if you're really in the financial area and you want to make the money that you are, and you have the responsibility that you are, you have to try to work that out. I'll stop there.
Great answer. The other Isaac, any thoughts to add?
Just really, I mean, you're going to find that you really going to have to find that challenge in every role, but at the same time, you're probably beginning to do finding or really learning how to balance a lot of that in school already. I mean, if you're, if you maybe some of you may already have some part-time jobs, maybe some of you, are already learning how to balance, well, I'm in school, but I'm also applying for jobs and I'm also doing something else. So, you're already learning how to build some of those or put some of those skills, those work-life balance skills into place already. And that's just something that you're going to develop over time, really, no matter what career path you choose. It's not specifically related to finance. It's any career that you choose, you're going to have to, be able to do that. But, hopefully those are the kinds of things that you're already beginning to learn through the experiences that you're going through now as an undergrad in school.
Excellent. Avi, I've got a question for you, or a new question, but maybe you'll be the first to respond to it. And this comes back to kind of making yourself stand out, your resume, your interviewing, kind of how you describe yourself. So as somebody who's maybe the latest stage entering the finance arena, but somebody who is exposed to a lot of really smart people at hedge funds, private equity funds, startups, etc., what jumps out to you as some of the qualities that make people either very successful at their jobs, or the types of people you want to work with, or you want to hire, or you want to invest alongside? Meaning, talk a little bit about the qualities you see and how it leads you to judge the people that you interact with.
Absolutely. The top quality that I look to interact with is an inquisitive mind. The person has to be curious about the world around them. And even if they are asking me questions that show they may not have read as many website articles as they should have read before our conversation, it still shows their desire to learn. And that's precisely what I'm looking for in the conversations. I'll see that from very seasoned venture capital almost by definition, don't know what the next big billion-dollar company is going to be. What is well, I guess, taking one step further back, what makes venture capital an exciting place to be as contrasted with publicly traded companies is that it's the one field where you can get in super early and have 1,000-fold returns. And that's not crazy to think of those numbers. So the ability to go along with that ride and deal with some really, really smart people, you have to have a way to converse with them. And you have to be open-minded enough to realize that you'll never know where that next amazing idea is. So those are the key traits that inquisitive mind and the willingness to engage with other people and keep asking those questions to challenge the other people. That's really what I'm looking for when I choose people to work alongside.
That's great. And bringing it home, and other panelists feel free to chime in, for somebody who's in college, when you're interviewing or reviewing resumes of somebody in college, how do you think they can communicate that? Or what else do you look for as kind of the breadcrumbs for that type of attribute when looking at resumes or in interviews?
Sure. I think that even in college, the education at yeshiva is strong enough, and given a little bit more flexibility in your time. Yes, as both Isaacs mentioned, there still are stresses even in college in terms of work-life balance. But typically somebody in college will have more time to read the most recent literature, whether it be Wall Street Journal or whether it be some sort of scientific literature or even just a web blog. And that they can provide to me, which I don't necessarily have as time to see on my own. It's impossible to read every piece of literature coming out every day. I think just for COVID, there were some 70,000 different articles published, scientific articles published on COVID. Absolutely impossible for anybody to read it. So somebody can very easily bring something new to the table that I have not seen yet. And I would expect that a college student, even at the base level, to have an inquisitive mind and to really be engaging. But the next level up would be they've done their research and they have read these articles with the full knowledge that no matter what firm you're going to, it's impossible that the person across from you has read everything. That being said, don't view yourself as being cocky. Don't assume they don't know what you're reading. But on the off chance that you're getting something new in there, or at least demonstrating that you've tried to bring something new to the table, are both excellent skill sets.
Right. Let me move on and just open this up to any panelist who has a story they want to tell, which is kind of mistakes students make trying to enter this field. And you're allowed to comment on mistakes you've made yourself if they're relevant for the discussion. So what are just the mistakes people make in the interview process, resume process, starting out working process, summer internship process, kind of cautionary tales?
Maybe I'll start if you don't mind, because
Sure.
I know I've made a ton of them. So, but I will start. First of all, I guess most relevant, to undergrads as part of the job search. I'd say, when I was starting out looking for a job, I very much closed the process, limited the process to just me and me working, or maybe directly with the career center at the time. Okay, looking at job leads, trying to apply to things online. Online resources weren't as expansive as they are today. So I figured, okay, here I am, using online resources. I did not really leverage network and connections in terms of either reaching out to alumni or personal connections through family and friends, or just reaching out to other people. That was a very big mistake that I made. And it wasn't even really so much necessarily about the job search process, but even just learning about and asking, people who I knew what they did, and getting a better understanding or a more detailed understanding of what it is that they did to help guide me into my search for my path, what it is that I was ultimately, going to pursue upon graduation. And so, by limiting that, I definitely had probably, the first couple of years, a bit more of a circuitous path, where, had I leveraged and had I brought more people into the process that I probably could have made, my career path a little bit easier, in terms of finding it is what I wanted to do a little bit more quickly. I think at the same time, though, I think everybody here should realize that, and just from listening to the other panelists here, I think everyone has to recognize that it's very, very rare nowadays that people get a job and work at one company or a couple of different companies in one kind of role for like 30 or 40 years. I think it should be fairly obvious, and Jillian spoke to it earlier as well, that over the course of your career, you should expect to be somewhat flexible. And, therefore it may involve you, taking some time to learn some new skill or new sets of skills as you go on through your career, because maybe you're going to find that you're going to change. The workplaces are very dynamic. The jobs that we do are a little bit more dynamic than they used to be. And so I think people have to really be a little bit more flexible and be open to learning new skills, taking on new challenges over the course of their careers. And maybe just not have it in their minds that they're going to be doing, the same thing for the next 30, 40 plus years or so. Anyway, I'll open it up to the other panelists, but thank you, Mayor, for that.
That was excellent. I would actually suggest that was, nobody could have said that message better ourselves. We are at the hour of 9 o'clock. And I do think it's always important to stay on time. So the time goes quickly. I think what you've all heard from all the panelists is that when exploring Wall Street, you should be curious, you should be exploratory, consider the wide ecosystem of Wall Street, make sure to network, ask questions, explore other areas, and certainly try to strike balance in all the things that are important in your life. So I think with that, I would like to thank Todd for arranging this session. Dean Strauss, I didn't say hello before, but it's great to see you as always.
Likewise.
Thank you for everything that you do for the school and for individuals involved. And I'd like to thank all the panelists, Rafi Friedman, Isaac Hagler, Avi Rosenbaum, Isaac Zimmerman, and we wish you all luck in your futures in finance.
It's Mayor, thank you so much, and the panelists as well. We sincerely appreciate it. This was our last event of the semester in the Career Center, and I always enjoy this one, and I think it went great. If there were any questions from the students that were not answered, please feel free to email them to me afterwards, and I'll definitely pass them along and get answers for you. And with that, thank you, Mayor, for staying on time. Excellent. And with that, we will conclude tonight's program. So thank you again very much.
Thank you all.
Thank you,
Thank you all.
Todd.
It's a pleasure.
Thank you, everyone.
Thank you all. Really appreciate it. Thank you so much.
Wonderful, wonderful.
Bye, everybody.